Hey, everybody, and welcome back. So here we go. We have got some crazy things happening. We are at almost 8% mortgage rates. I know it's not funny, but on one side, it's super crazy compared to where we were just at just 2 years ago. It's unbelievable. Now, the flip side to this is, and it's funny because as I was talking to some folks earlier, we remember not that long ago when par pricing was 8.5%, 9%, and then when, rates went down into the sevens, we thought we won the lottery. And well, here we are. We're bonk right up next to that 8%. And there's a high probability we are going to crest over because here's the thing. Look, when we take a look at inflation, we take a look at the momentum of the economy. Those are the two things that are really keeping the Feds from actually starting to do their pivot, to keep them from pulling back and then letting rates start to come back down. Because listen, if you look at mortgage-backed securities right now, because we had a massive bond sell-off, and again, that's why we saw the rates bump up again. Mortgage-backed securities, until they stop selling all of this off, we're going to be in a tink, slightly higher, mortgage rate level. Now, is it going to hit the eights? There's a good possibility that's going to happen. And sure, 7.5% rates are now the new favorable rate. But what's super interesting is buyers and sellers, they are still active. Heck, we're in the middle of multiple offers. In fact, I think there were 8 offers presented on a home that we're competing on. And so I thought I'd do our video in between then so that we have, you get information and they do too at the same time. Anyway, so let's move on with our show here. Hang on a second. I lost my mouse. There we go. All right. Here we are. All right. Now, mortgage rates. Mortgage rates, as we said, almost hitting 8%. So as we pop over and we take a look at the numbers from the Northwest MLS, we talk about what is going on with the MLS. Look, we have 865 new listings, 1,020 went off market, sold 790. But as we pop back up here, you can see that we've got 147 that came back on market, and then, of course, 740 that had a price reduction. That is super important. Understand, we're still seeing more homes going pended than are coming on market. So that means that, hey, we have our bucket here, and as we're adding homes to it, we are still drawing down inventory, even though we're putting inventory into it, because buyers are looking at it as a safety net. Sure, interest rates are higher. Sure, there's not as much inventory out there, but pricing is still heading in an upward trend, and it is defying all of the rules. And that is that is creating a lot of of the economists and all the bigger head sheds than we have here, and they're being a little perplexed. And we are seeing that trend. And in fact, we're still seeing that towards the end of this year, probably more likely 2024, we're going to see mortgage rates start, I think, to come back down. I think the Feds will pivot, which will drive us into a recession, which some people are saying, oh, no. And I'm like, no, dude, actually, that's what you want. Why? Because every recession, mortgage rates come back down. Property values go up. We're already having a limited inventory. Yes, that will drive the inventory down to where it was like in end of 2020 and all through 2021. That will be a little bit dangerous, but let's stay on track here. If we take a look at the chart down below in yellow, you can see year to date, our inventory level that we're seeing is 28.3% less than where we were at last year. 25.4% less sales. But remember, when we take a look at what is going on in the market, even on pre-pandemic levels, what's super important to understand is we're like 41% lower inventory than pre-pandemic levels. That is a big number and something to keep in mind. So even when we see lower numbers here, we had more inventory in 2019 and moving forward. or moving backwards, I should say. So keep that in mind. Everything, everything's a matter of perspective, as they say. But let's take a look at new construction. So new construction is doing incredibly well. And in fact, when we take a look at those numbers really, really fast, so again, 9.7% less inventory. But look at this. We're only 4.2% off where we should be. And then, of course, 22.3% higher in actual pending sales. So we're seeing the new construction, again, is still doing amazingly well. Our numbers are doing very well, and including with pending sales as those come to close, because newer construction, depending on when they're at in their construction phase, can take longer to close. But remember, take a look at last week. Why should you be looking at new construction? Better interest rates by almost 3% now, and taking a look at the fact that you can get a new home. You're going to get on a smaller lot. That's a given. Different incentives and great mortgage rates to consider. Make sure that you're working with a real estate broker that fully understands and knows how to negotiate with builders. It is it's a little niche market. Sure, anybody can go and do it, but to get and to save thousands of dollars, make sure you're working with somebody who is very familiar with working with new construction and not just, regular home sales. Moving on. Let's take a look at REOs and bank-owned property. Super, super interesting here. A lot of folks are just, you're starting to see some of the doom and gloomers. But look, year over year, sure, we're up 23%, 11 homes. We're at 18 more homes new as far as inventory. But look at that. We're only at 21 homes year over year more than we were last year. That's peanuts. That's nothing. Now, are we starting to see a few more defaults? Sure. Is it normal? Sure. Do we see a lot of foreclosures here? As you can see, that is a case and story no. And in fact, the wall of shame, meaning agents that put their property as a normal non-REO or a non-bank-owned home, but they checked the box by accident. Instead of saying none, they said yes. We've seen more of those than we do of the actual bank-owned homes. Well, not exactly more, but too many anyway. So with that, super low inventory. Next year, will we see some more? Maybe. Our inventory is so horrifically low, I don't expect that to amount to much of anything. Anyway, if you guys have any questions, definitely look back. When we take a look at rates, let's take a look at what's going on. As you can see here, 7.63% Freddie Mac right now. And of course, 7.97, that's where bonk, right up next to that 8% mark. Make sure that you are monitoring the mortgage-backed securities. Watch the 10-year treasuries because they go hand in hand. It's a great metric. They don't control each other. Just historically, they've always stayed very tight to each other. Now, when you do that, if you have questions, I'll put the link down below. Look, it's a free calculator. It'll allow you to line up 1, 2, 3, 4 different mortgage options to consider. And it'll drop down. It'll tell you exactly the pros and cons of each one, how they pencil out. It's a free service. Please enjoy it. Just remember to give us feedback on what you're seeing and what we can do to improve it. That's it. That's all I ask. And in the meantime, hey, remember to smash that subscribe button. Make sure that you're taking a look at that. And look, you get all kinds of free information. There's no selling. The key here is to get you everything that you need. And in the meantime, I want you guys to have an absolutely beautiful weekend out there. I'll see you guys on the next video. We're going to do one for some updating on what you should do in the fall. And have a great day. Take care.